The market had a relatively flat day with the S&P 500 closing down 0.22% at 5662.89. Today was the third time we tagged this 5700 level in the last 4 trading sessions. That 5700 level is also our zero gamma exposure line. This is just highlighting the importance of this level as a resistance point in the market. The market appears to be attempting to bounce here, coming out of our lower dealer cluster zone over the past week. We have breached the whole moving average at 55.34 on the daily candlestick chart. So it looks like quite a bit of support, both technical and from the options chain in terms of momentum. So that 5,700 level is going to be really important if we can get above that level over the next few trading sessions, especially coming into the March 21st OPEX this Friday. I think there's a really big chance that we could see a momentum shift back to the upside heading into April. In terms of volume on the options chain, the largest volume today was at the 5,700 strike, and we saw pretty big volume at the 5,750 strike as well. And so this to me suggests that market participants believe that there is some credibility to this potential 5,700 breaking, especially when you compare it to the volume that was coming in at the 5,600 strike, much lower at lower strikes below where we're trading right now.
Thanks, Anthony. Yesterday was the first day that the VIX closed below 20 since February 28. And so I'm not surprised that we saw a reactive attempt at least to bounce from that this morning. We saw the VIX spike back over 20 again. This morning, the market staged a pretty nice rally. And even with the weakness we saw late in the day, the VIX still couldn't muster a move to higher levels. So I'm watching this declining whole moving average. It continues to drop lower each day due to the trend with volatility recently. It's this yellow line at 2257 right now. So in my view, market bulls want to see the VIX stop any rally at 2257 for the daily close in order to give more room for the market to rise. But just on the surface, it's a positive sign for market bulls that the VIX is below the hole. It's stayed below the hole, and we can see our dealer cluster zones are indicating that VIX positioning in terms of gamma exposure. The lower area that we would consider a potential dealer demand area would be down here close to the 16 and 17 area, whereas we're at this 20 zone right now. There was a lot of volume there today. We also saw a lot of volume at 30. So we're not necessarily out of the woods, even though we've seen the VIX pretty steadily decline going on 7 or 8 sessions now. So we'll keep an eye on that.
Thanks, Sean. Yeah, that declining VIX is definitely key to watch. And next, I want to take a look at the Qs real quick. We've been highlighting this 480 level on the Qs. It continues to remain relevant and important. Today, we closed just under 480. Not much movement, down 0.33%. This is the largest gamma exposure concentration, the largest volume in the options market also coming in at that 480 strike. And just zooming in here a little bit on our chart, taking a look at the distribution of volume in the options chain today. Of course, as I mentioned, the largest volume being at 480, but then to the upside, the volume is much higher than below the 480 strike. So the distribution has shifted higher, and this is a little bit different than what we've seen for the past couple of weeks on the Qs. This could mean a shift in market participant expectations that a move higher in the Qs is coming, especially after this monthly OPEX that we're about to hit tomorrow. So we'll continue to watch the volume and the gamma exposure data. Basically, everything has been consolidating right around this 480 level over the last several trading sessions. In our minds, however, a close above the 485 strike, which you can see is really where we've been bouncing off of 3 out of the last 4 trading sessions, similar to what we're seeing in the S&P 500. But a sustained move and close above that 485 level is going to be our signal that bullish momentum is kicking back into gear. I don't expect that to happen until next week, but it is something that we are watching for and we are positioning for in our own portfolio, which, by the way, you can follow along in our community Discord. You can see all the moves we're making. I'll put a link down in the description below, and you can check that out when you get a chance.
Thanks, Anthony. I've got DIA pulled up, the Dow ETF. We do have some positive GEX clusters above, including at 430, where we saw some pretty significant volume today. As you can see here, we were above the whole, which is 412.58. And even though we saw an intraday fade from the highs, to me, and I don't like that the lower Keltner channel, we're still in a downtrend. But yeah, it looks like this DIA may have a runway to 430. In my view, failure at 412 would open the door to this 400 area again, which really hasn't been visited since September. Bulls can hope we don't see that, but it's something to be aware of just so you have some sort of a game plan in case things head south.
Thanks, Sean. Next, let's take a look at Palantir. Palantir trading still below the 100 level, but making a little bit of a move today, up 1.5%. If we go back to starting right on or right before the election on November 3rd, Palantir has essentially been holding this trend line. And what's interesting is that we bounced off of that trend line, of course, multiple times now, and we are also above the whole moving average on the daily candlestick chart. That whole moving average is at 80.42, and on top of that, the gamma exposure data is all concentrated to the upside between 90 and 110. So despite the volatility on Palantir, despite the huge sell-off, basically over 30% in just a couple of weeks, the trend, the technical factors, as well as the gamma exposure data are all pointing higher currently for Palantir. So I think this is actually an interesting point as we've been consolidating over the last several trading sessions to play for a low risk, high reward type of strategy. These are our favorite types of setups. Asymmetrical risk reward approaches to your portfolio. So you can take a speculative position in a name like Palantir, for example, an out of the money call debit spread, for example, buying the 100, selling the 110 calls, potentially in the April 17th expiration. This allows you to get exposure to a potential move in the underlying stock at a relatively low risk. So you have a $10 wide spread. Depending on your expiration date, that may cost you anywhere from $1 to $3, let's say, for example, and your upside could be as much as $7 or $8. So that's the type of play we're going to be looking at in our own portfolio here in the coming days on Palantir.
Thanks, Anthony. Let's take a look at Meta, and really big intraday move today. Meta breached 600 at one point today and was there for quite a while before fading all the way back down to 586. We're still above the whole moving average at 580. I consider that a positive, and we've been watching this large GEX cluster, which doesn't look very big right now because this 600 GEX cluster popped up, which most of which expires tomorrow for OPEX Friday. But this is a pretty large GEX cluster that's been in focus for a while. It happens to coincide with the upper Keltner channel at the moment. It looks like that 700 is very possible. It's certainly not a day trade, but it looks like at least, over the next couple of months, pretty good chance that Meta, finds a reason to climb higher.
And if you want access to our gamma exposure dashboard and our option flow analytics tools, as well as our newly added algorithmic trading strategies with full backtest results you can add directly in your gamma exposure charts, head on over to geeksoffinance.com. We are running a special promotion, $300 off our yearly portfolio manager tier subscription. Use code SPRING2025 at checkout. We have a few spots remaining, so definitely take advantage of that while you can. Members also get access to our community Discord where you can follow along in our options portfolio and see all the moves we're making every single trading session. I'll put a link in the description below. Thanks so much everybody for watching, and we'll see you guys in the next video.